Okay, in today's episode, we are talking about uranium. As you know, it is one of my favorite subjects, and I think one of the most interesting investment theses that's out there in the world today and presents an incredible opportunity. And one of our regular guests on the subject is Mr. Justin from Uranium Insider.com. And so that's what we're going to be talking about here today. So just want to give a special shout out to our channel sponsor, which is Vizsla Silver. So if you're looking for a new mining stock or a new silver stock, thank you, Vizsla Silver. Make sure you hit the like button on this side right over there, this side right over there, and give us your uranium price prediction in the comments right there down below for 2021. How are you, Justin?
I'm great. How are you doing?
Doing good, doing good. So we got a day with most uranium stocks up here today. We've had a consolidation and a pullback in some equities. And then also there's been a lot of uneasiness about the broader stock market that I'm sure has played a little bit into that. So give us your thoughts on what's going on.
I think what's going on right now, at least for uranium, is kind of a continuation of what's been going on for the past few months. It's we've seen just a large amount of what we believe is mainly institutional money coming into the space, despite the stagnation of the spot price. The spot price is actually down something like 10 or 12% since the beginning of December, but we have uranium equities up. Some of them are a double, some are even pushing a triple from December, which is crazy. But yeah, I mean, today, on a day like today, we have NextGen up, we've got Cameco up, the big boys in the space.
Energy Fuels was up almost 5%, at least intraday, right before you and I were on.
Those mid and large market cap uranium stocks continue to perform really, really well. We're seeing good volumes come in. We're seeing huge amounts of money come into the space through private placements and equity raises. We saw NextGen do a bought deal for $150 million. That was 2 weeks ago. They just closed it, I believe, yesterday. We saw Yellowcake, the fund listed on the London Stock Exchange. We saw them raise 110 million, and they upsized it to 140 million. They have a deal every year to buy $100 million worth of uranium from Kazatomprom. So they upped it by 40 million above their allotment, which means they're going to have to get that elsewhere, likely the spot market. And we continue to see the share counts of URA, the primary uranium ETF in the space. It's only 70% allotted to uranium, but it's still the largest ETF. And URNM, the share counts of those are reaching new highs. At least for URNM, URA is a multi-year high, and the assets under management continue to grow. And that's great to see because that's indiscriminate buying of their underlying holdings whenever those stocks rise. So it's been a consistent inflow of, let's call it smart money, institutional money, generalist funds moving into the space. And it's been very interesting to watch, especially with the spot market kind of stagnating and even dropping a little bit. But yeah, something has fundamentally shifted in this market over the past few months, and it continues to hold really strong.
So is what's moving this right now, you think, bigger money that recognizes that this market could really take off here pretty soon, and it's bigger money like that, or more professional investors that are essentially getting their positions right now in anticipation of further movement?
Yes.
So one of the questions that I asked Brandon from Bannerman the other day, and I asked Craig Perry as well, was on a scale of 1 to 10, 10 being an absolute and 1 being an improbability, where do you rank the likelihood or impossibility of hedge funds coming in right now and front running the market? Because if you were a billionaire and I was a billionaire, I'd be knocking on your door right now telling you we're going to go right now and we're going to make some incredible waves here.
Clear out the garage.
Yeah, we're going to go clear out the garage, dig a couple holes in the ground. Yeah. So where do you rank on that scale?
Well, you said right now, so I don't know how to judge that right now, but an inevitability of hedge funds coming into the space to buy physical uranium is a 10, 100%.
What would need to happen for that? Yeah, what would it need to happen for that? Like, I guess that kind of answers the when question too.
I would say a thorough positioning and a recognition that the spot market is in a place that type of buying will actually result in what they're looking for happening. So, yeah.
Go ahead, please.
No. I just think if it's going to happen, which it will, I believe that the funds in general will be positioning individually and collectively prior to coming into the market to purchase uranium. That's I think the biggest caveat, because it's pretty well understood that the uranium market is relatively thin, the spot market, at least for U3O8 and to some extent UF6, especially U3O8. We know that there's a decent amount of UF6 inventory, and that's a bit of a black box. Nobody really knows how much UF6 inventory Orano has, but it's a decent amount. But the U3O8 spot market is incredibly thin. There's barely anybody selling into the market. It's BHP from Olympic Dam, UG, which is the selling arm of Orano. They're the ones that sell in the spot market. They sell a little bit. They've been relatively quiet. Uranium One sells a little bit, and the Uzbek sell a little bit. Itochu, which gets pounds from Uzbekistan, sells a little bit. But for the most part, it's pretty well understood the U3O8 spot market is extremely thin. So my opinion is that they are waiting to be fully positioned in the space prior.
And when you say fully positioned, are you talking about positioning in the equities first?
Correct.
Do you think that this is what's taking place right now when people say, well, why are these stocks moving? The spot price is going down. This is just another time when uranium investors think the price is going up. But, there's real movement and there are big money. So do you think this is that stage of the positioning before the inevitability into the spot?
I think that's part of it for sure. I think another part of it would be, I would say that maybe there's three parts that come to mind. One would be the hedge funds positioning prior to buying physical. Two would be generalist money and generalist funds buying into the ESG story, and nuclear power now becoming a clear solution for green energy, for carbon-free energy production globally. That story is gaining speed seemingly on a daily basis. So there's ESG specific funds and there's generalist funds that have a certain allotment to ESG investments that are starting to accept nuclear power as being a relevant investment to fit that bill. And then I would say kind of a third piece of that would be years of underperformance with fundamentals being positive. So, and it's just kind of been playing catch up. I wouldn't even call the uranium equities overvalued here. Maybe on a very short-term basis, if you look at the technicals, some of them are a little bit more than, let's say, 2x the 200-day moving average, which is by definition somewhat parabolic on a technical analysis stage. But we've had many, many years of the writing being on the wall of an eventuality of a turning of this market, and the SWU price rising, the uranium price rising, UF6 at all-time highs, or conversion at all-time highs, UF6 rising. And then the fuel report that came out in 2019 showing, even the reference case of the future supply and demand outlook for the space. It's unbelievably obvious, the pinch that's coming in the later part of this decade. It's just a matter of time when everything kind of catches up to that clear thesis. So in my opinion, what's happened in the past few months has sort of been playing catch up. And I still think we're super, super early in this market. So I would say those are kind of the three pieces that are sort of converging right now to create this seemingly illogical equities movement with the spot price staying stagnant.
What about black swan? What would you say when you're looking at this market would be your guess on, obviously a black swan is not predictable, but what do you think the biggest squeeze or catalyst to this market could be?
You mean for the price moving up and the equities moving up?
Yeah, or on uranium itself, just the supply and demand of uranium itself.
Well, I think there's two things that are inevitable that are going to happen, and it's just a matter of when they happen. One is what we've just discussed with the hedge funds buying physical. There's very clear memories in fuel buyers that are currently fuel buyers that were fuel buyers in the last market. Remember very clearly what happened. And that's very highly likely to happen again. It's kind of like the capital markets will end up determining where the nuclear fuel market goes. It's like it's backwards from what we've been planning for for a number of years, which is, okay, the nuclear fuel market will recover, prices will steadily rise, and the capital markets will take notice and capital will start flowing into the space. And now it's like, no, the capital markets are coming into the space now, and they will be buying physical uranium, and the capital markets will be determining where the price goes, not necessarily the fundamentals of the fuel market. That's what I think is coming. But as far as a black swan is kind of by definition unpredictable. So an unpredictable black swan would be something like further supply disruptions, which at this point could only be because Kazatomprom and some JV in Kazakhstan with Kazatomprom, because Cameco is producing nothing in Canada at the moment. So I suppose there's potential black swans for that, and another one would be. And Brandon talked really eloquently about this with China and the China situation, as he calls it. I think that a lot of investors understand that China has a very large inventory of uranium. They have somewhere 300 to 400 million pounds of uranium, but judging by their growth trajectory, it's highly likely they'll be coming into the market for more uranium. So we have this assumption that China's good with what they have, but all of a sudden we see China scoop up a major project in Namibia or something, another one, or go in on a project in Niger, or invest another 20% in another project in Canada. Who knows what it could be? But if China swoops into the market and scoops up some more pounds on top of what we already know they have with their mines and inventory, that'll be an unbelievably huge signal to the rest of the market to, shit or get off the pot.
So how much longer can this go on where, we've heard these stories from people like you and people like Brandon that have, made a compelling argument on the supply and demand, how much is mined, 200 million a year, how much was brought on, 120 million, seeing all these closures on mines with from lockdowns. How much longer can this go on with the spot price at $27, right?
Yeah, it's an interesting sort of situation because you have all these converging factors that make it pretty obvious that there's going to be a squeeze in the relatively near future, but you also have utilities still sitting on a bit of inventory. Europe is in a better place because they require a minimum of 3 years inventory. And in the US, we're looking at maybe just under 2 years of inventory. So it's possible that the utilities, again, spend another 6 to 12 months of not buying a whole lot of uranium. That is possible. But the longer they continue to do this, the more likely the price is going to spike and go nuts rather than have a steady, healthy rise in a sustained rise in the price of uranium, which is way healthier for all the miners. But obviously, from an investment standpoint, those price spikes can be quite exciting. So yeah, it's possible that I think we can go a bit longer, but it really depends on when the hedge funds comes in. It depends on a number of factors. It depends on one of the major nuclear utilities in the US, if they clear and get a couple of their plants cleared for life extensions and not having to close them in Illinois. That would be a big signal because they could come into the market for pounds. That would be a signal to the smaller utilities.
When would we know about that?
That's going to be this year, I believe, in the coming few months.
Oh,
yeah. And so I'm forgetting the name of the utility. It's not Duke. It's the other big one. It's slipping my mind at the moment. Exelon, excuse me. So that's something that could happen. The hedge funds coming in could happen. And then Cameco is yet to really do any significant buying in the spot market. And with Cigar closed, and we believe Cigar is going to stay closed for longer than the market is expecting. And we hopefully will hear news from Cameco at some point soon, giving some clarity on that. But they don't really need to announce when they're going to open it until they're ready to open it. And so far they've said, we're going to keep it down until it's safe. And judging by their stated commitment to the ESG metrics that they're aiming to fit into, they don't seem like they're in any hurry. So long story short, with Cameco, they're looking at 12 to 15 million pounds to buy in the spot market this year. And they have yet to really start that. So, yeah.
Yeah, I think they should hire Dr. Fauci as CEO, and then they'll never open again, and we'll just have this amazing crunch on the supply. It'll be good for us all. But so when you are looking at that and doing the math on that, I mean, you say 12 to 15 million pounds. How is there any way to accurately estimate how much is left?
I mean, Cameco, I mean, no, not really. But that amount of buying from Cameco is essentially roughly the amount that can be sold into the spot market this year at these prices.
Oh, wow. Okay.
Yeah. So you've got, around 8 million pounds from Olympic Dam from BHP. You've got a few million maybe coming from Uranium One. You got a few million maybe coming from UG, from Orono. And you've got Itochu in Uzbekistan. So, maybe we'll see 15 to 20 million pounds available for sale in the spot market of U308. So Cameco and anybody else that wants to join the party will essentially scoop up what can come into the market right now. But it's pretty well assumed that there's not a whole lot sitting around for sale at these prices. Yeah.
Interesting stuff. So tell me about this ESG stuff. And for, someone that is unfamiliar, explain what this is. You guys, a lot of the people you're leading the uranium charge, yourself, Brandon, these types of individuals, they talk a lot about it. What does this mean? What are the implications of it?
It stands for environmental, social, and governance. And it's basically an investment category that, for lack of a better word, allows people to put their money into projects that are, and companies that are acting responsibly in those ways. So environmentally responsible to their employees, responsible to their shareholders, I suppose, with the governance factor. And historically, that's been a lot of green energy, so wind and solar and things like that. And it's pretty new and honestly pretty incredible based on watching the sector for a number of years that nuclear can even be considered. I mean, it's obvious to somebody that understands nuclear energy and the relative safety and the relative environmental impact compared to even, wind and solar, that should obviously be included in that basket of investable sectors. But to see it actually happening is pretty astounding. And on top of that, you have, governments now starting to be increasingly in support of nuclear energy to fit that green energy bill, mainly because it's kind of obvious that you can't really meet these decarbonization goals without it. You just can't load the grid up with intermittent energy sources without having massive battery storage, which nobody does. So yeah, the ESG factor, I don't know how many funds that are ESG specific and their assets under management. I know that it's substantial. It's a lot of money that can come into the space, that has started to come into the space. So it's a major development for uranium. Are they
allowed to invest into uranium, or does it need to be approved as ESG approved first?
That's a great question. I actually don't know, but judging by what's happening now, they are allowed to do it because it is happening.
So when we look at the uranium market, when I was talking to Brandon, it made me even think like we're underestimating the amount at which this is going to be required, not just on a per pound basis, but you look at America and how much, what I think, would you say, told me before, it's 20% or so of our baseload power. And globally, I think maybe it's a little bit less, but you're seeing all these plants coming on. And then, in China, people just drop dead on the sidewalk because of the how bad the air is there. Wow. I remember my dad went when I was a kid, and he said it was so bad there. And so you talk about these decarbonizations. Where do you think, let's say 10 years from now or 20 years from now, this market could be? And do you think that there'll be a growing demand for it to absorb a larger part of the global electrical output on an annual basis?
Oh, for sure. Yeah, it's all signs are pointing to that, definitely. It's interesting because from an investing standpoint, we generally look at an expectation in a rising price likely to result in an overshoot of price and then to settle back down at a higher low. That's kind of what we're expecting, which it started to do in the last market before Fukushima. So it spiked to $134 spot. And I think it overshot the term price by, the term was around $100, if I recall correctly. And it settled back down in the 40s, maybe even the 50s in 2010. It dropped back down into at what was at the time, close to the global cost of production. And it started to climb back up and tick back up. And then Fukushima happened, and it sent the market into a tailspin for a decade. But from what I can tell, this is highly likely to be a long-term sustained growth in nuclear energy. Where the price will settle, who really knows? I mean, we know that it needs to settle somewhere in the 60s.
When you say settle, you mean longer term, not just
right. Right. So let's say a sustained, consistent price that will allow. I mean, when we're looking out past 2025, okay, by the end of the decade, Cigar Lake is gone. McArthur River is close to being gone. Kazatomprom's production peaks at the end of the decade and starts to decline very rapidly into the 2030s. I mean, we need every single proposed project in existence right now to come into fruition and be producing, within the 2025 to 2030 timeframe to avoid a huge deficit in supply.
So they have to be mining by 2025 or so then, right? If you're saying that these things are coming offline around then, or no?
Well, we have Paladin's Langer Heinrich and Cameco's McArthur River that can come online within, let's say, 3 to 5 years when the price rises to justify those coming online. That gives us an approaching a balanced market for a few years. But the mines that are up and running now, like Cigar Lake and Kazatomprom, those start to deplete out towards the end of the decade. So we need more projects to come online in that time frame. I wouldn't say by 2025. I would say more like 2027, 2028, in development and happening. But in order for that to happen, there's billions and billions of dollars of capital that need to come into the space and a sustained price that justifies all of that happening. Who knows what sort of technologies might come out at that point, which is, I think, why we don't speculate on a super long uranium market for the equities. We still look at, let's say, a 2 to 4 year investment from this point for that overshoot price. But I do think it very well could be a long-term bull market for nuclear energy and potentially for uranium as well. It just depends on what comes online and how quickly. And all I'm telling you, all the projects that are proposed right now will not be coming online no matter what the price is. There's always problems. It just nothing goes perfectly smooth in this sector.
So you're saying 2 to 4 years for those of us holding the equities, which you believe is the time frame by which we should see that type of overshoot in the price where we hit a peak in the equities?
Correct. And you know what? I mean, it's always possible that utilities wake up in the next 6 months and start signing long-term contracts, and McArthur River comes online, and they sign long-term contracts with Paladin, and Langer Heinrich comes online, and we see a sustained rise. But you know what? It's just not taking in the hedge fund factor. The utilities are not the only players in this space, and they won't be. You have traders. You have a ton of traders who are speculating in the price all the time. In fact, that's what's going on with the spot market right now. It's just traders just trading pounds back and forth on tiny volume, just scraping nickels off the floor. And we don't have utilities. We don't have end users buying. When that starts, that's when the real fun starts to happen in the space. And I'll entertain the possibility that we could see a slower price rise, and we could see a longer term bull market, let's say 3 to 5 years, maybe 6 years before we have, everything is cyclical. It's not going to go up in a straight line, and it's not going to go up forever, no matter what. But I think every passing week, the likelihood of a price spike and an overshoot increases, and we have a shorter investable bull market in the 2 to 4 year time frame.
Yeah, and the other thing, we talk a lot about like macroeconomics on this channel, and one of the other things that's pretty interesting to me is when you talk about funds getting involved. I mean, look, these hedge funds and a lot of these institutions, they can borrow money at 0%. It's literally free money that they can just go use it wherever they want, and we're in this such an erratic bubble in in the broader financial markets, and there's so much liquidity, and people are throwing it into a bunch of nothingness. Then you have something that is this important that also, if you squeeze it, you can't just bring more on and fix the problem. I mean, to me, just kind of trying to logically deduce out of it, I go, it seems like even if the price doesn't go to 100, you could have a lot of mania. But personally, my opinion, and this is just my uninformed opinion, is due to the amount of mania and cheap money in the world, we could see a crazy move that goes well beyond that 100. I think it's I don't think it's a 1% probability. I think it's a lot higher than that. Where would you rank it on the probability scale? Or do you think I sound like a crazy person?
No, you don't. I think that it's increasingly probable. I've said in the past that I don't necessarily think that the price is going to overshoot super high and go higher than the previous peak of $134. But I think that I should make a caveat to that statement, which is, well, first of all, it doesn't matter. The equities market is going to go way, way beyond the valuation of the previous, which is 150 billion at the peak for the total sector. Okay. I wouldn't be surprised if we go 300 to 500 billion by the time this thing peaks out.
300 to 500.
I would not be surprised. Yeah, I wouldn't be surprised, just based on the things that you just said too. Mm-hmm. The amount of capital that's out there, the amount of liquidity. Funds looking for value now with growth kind of petering out, borrowing rates, et cetera. So, but I should say that utilities are not going to be paying that price. That price is going to be going on small volumes traded by funds and traders. That's what it was in the last time too. But if we see prices north of $100, like people are always saying how the price of uranium is negligible to the nuclear utilities. It's just not true. It affects their bottom line. And some of these utilities that are operating in deregulated markets where they have to actually compete on price with natural gas power, et cetera, it does matter. And they'll follow the trend upward and buy what they need to buy at the price they need to pay. But if you're talking $100 a pound, it's like some of these things are just going to shut down. But that doesn't necessarily matter from an investment standpoint. Because if we have traders and funds moving the price higher than that, that's what the market's going to be watching anyways. So yeah.
Where are we at right now? You said, you wouldn't be surprised by 300 to 500 billion. Where are we at? Like
20 billion. No, just under.
And this is the math after the recent rally. This is a pretty much up to date.
Yeah. I haven't looked at it today, but it's somewhere in that ballpark.
20 billion. And you're saying you think you wouldn't be surprised by it going to 300 to 500. Why do you say that you think it could go to 300 to 500? For the same reasons I illustrated, or are there some other ones?
Well, if we look at inflation alone, that takes 150 billion to probably close to 2. And then we talk about just the level of capital that's here. We have a whole new means of communicating with each other that didn't really exist in 2007, or at least not to the extent that it does now. So there's a certain mania that's involved with retail now. And then you also have just a huge amount of capital that's looking for alpha. They're looking for a return on investment. And if this thing really starts trending like crazy, we could see valuations way, way higher than what logically makes sense. Just like we're seeing in other sectors, like GameStop and Tesla and these things. There's no way you can value these companies and come up with 10% of what they're valued at. So the mania factor is one that we can't predict, but I don't see any reason why it would be avoiding the space. It did happen in its own way back then. We had, 400 or 500 companies come into the space in 2000 by the peak in 2007. It started out at 6, over the course of 3 years, or 8 companies, whatever it was, Paladin, Laramide, Cameco, Denison, there were a few others. That was pretty much it. So yeah, it's again, to quote Mike Alkin, it's like you be conservative with your estimates, and then the overshoot is just kind of the gravy. It's like, we know it's going to 60, 65 a pound. We know the market has to be valued way higher in order for capital to come into the space to capitalize the development of new projects that have to happen in order for this sector to even have the fuel it needs. which it will. It will happen. You don't really have an option with nuclear power until you get to these crazy, crazy prices with markets in the US, like I mentioned. So it's basically, I mean, barring a black swan event, like a negative black swan event, like a meltdown of some kind, or a drastic change in, let's say, in demand based on a major country just pulling the plug on nuclear, like China or France, or the States.
They start using candles instead of electricity.
Right. But even those things, like China, I mean, all of these places, the United States is talking about getting massive life extensions to most of the nuclear fleet. France just confirmed that they would be extending EDF's plants, which was, I think it was at 32 of their plants will be extending from 2025 to 2035. That was up for review, and we weren't sure if that was going to happen. It was proposed a couple of years ago, but they confirmed 2 weeks ago. So that's a major, France is a huge consumer, and China just recently confirming that they plan to have, what was it, 70 megawatts by 2025, and they're at 40 something right now. I don't have the numbers right in front of me. So that's a confirmation of a slightly greater growth than we were expecting out of China. If you plot that on the WNA fuel report, it's somewhere between the reference and the uppercase when it comes to the demand. So, without some major hit to demand or a meltdown type of event that either really hurts sentiment or actually affects demand, like Fukushima did, it's basically, I've never seen a market like this where it's basically a guarantee that we're going higher. I mean, there are no guarantees in investing, but it's as close as you can get, It really is.
Yeah, no, I mean, it really is. It's why I got so interested in the sector, was because it wasn't hard to understand. And, I didn't need to know all these different things of the fuel cycle. It's just how much is produced, how much is needed, and how much is coming online. And I was like, wow, this is a pretty no-brainer type of thesis.
Yeah, and that's all you really need to know is those basic supply-demand fundamentals in order to have a pretty decent conviction to come into the space. In my opinion, it's taken a bit more work to understand kind of the inner workings of the fuel cycle in order to maintain that conviction during moments like we had, leading up to March of last year. Even before COVID came around, January of last year, you had URA. They had dropped down to a 50% allotment to uranium, so they were selling, and then people were selling the ETF, and that was more selling, and it was day after day after day.
I didn't own one stock until after the sell-off, not one uranium stock.
No, you timed it very well, my friend.
I didn't do it on purpose. Yeah. It was just dumb luck.
Yeah. So, it's in order to have conviction, like even the past few weeks, we have a slight consolidation. You have all of these uranium stocks kind of bull flagging, pulling down 20%, 25%, 30% even from their highs of February. But and if you're seeing that sell off and you're seeing the spot price drop by a nickel, drop by 20 cents, you might be thinking, oh, damn, was this just a speculative fervor? Should I get out? But if you understand what the heck's going on in the background, it's just no. I mean, buy. I bought a substantial amount this past month, and I've been investing in this for 4 years. And, my returns are fantastic to this point, and I'm still adding because it's just the fundamentals just keep stacking up. It's I'm almost without words. I don't even know what to say. It's I'm waiting for some negative news to come and just pop this, pop my bubble of optimism. But it's it just keeps going. And to see the institutional money come into the space adds such an incredible amount of conviction on top of that, because it's oh, now the smart money sees what we've been seeing for 3 or 4 years, and now the game is on. That's how it feels to me.
Yeah, yeah, that sounds about good to me. So give me your uranium price prediction for 2021.
Oh, gosh. Who cares? I mean, if I'm being honest, that's what I'm going to say. But no, we're going to see some buying coming pretty soon. I called on Twitter a few days ago that I think the spot market has bottomed here. At least, the temporary bottom for this moment in time. We've been seeing it tick down. I mean, maybe we'll see another 50 cents down or something like that, but it doesn't really matter. Nobody's buying yet. So I think we'll see My prediction is a higher low. That's my prediction. So I think, and with a caveat that if we see utilities come in, if we see hedge funds come in, then we could be into the 40s by the end of the year. But I'm going to say high 30s if we're just talking Cameco and traders. If the utilities sit on their hands again, we'll go high 30s by the end of the year. Next year, hold on to your hats. Yeah. But if utilities come in, then maybe we'll see 40s this year and less of a crazy spike next year, would be my guess.
So you said that right now the market's about 20 billion for the market cap of the equities. Where do you think that could go by the end of the year?
Oh, I think we could see that in the 30s to maybe 40s. We could see a doubling here in this year. Yeah.
All right. So for everyone listening, if you want to stay up to tune with the uranium market, the uranium equities, and all that is getting Justin excited, make sure you give us a comment down below. If there's some questions that you want answered by Justin next time he's on, hit the like button on either side. You can check out uraniuminsider.com. I'll link Justin's Twitter right there down below. And thanks for coming on, Justin.
Always a pleasure. Anytime, Jake. Let me know.
Yeah, absolutely.